Hello, Brian Manning here with your weekly update. And before we get to the financial markets, I just want to say it's really staggering that it is the 14th anniversary of 9/11. And I think of hearing people talk about when Kennedy was assassinated and just remembering exactly where they were when they got the news. And I think the same thing translates into 9/11 and where you were when the events were unfolding and towers were falling. And it certainly was a very moving day and has affected the nation for a very long time. So certainly our thoughts and our memories go out to everyone that was involved in 9/11. Moving on to the markets. So Monday this week, markets were closed for Labor Day. It's nice to get a little bit of a 3-day holiday in there. On Tuesday, we got some information from CoreLogic. So CoreLogic's reporting that serious mortgage delinquencies are at their lowest level since 2007. And still, we've said this before, but it's amazing how appreciation is the magic elixir and certainly keeping delinquency levels very low. So overall right now, foreclosures are down 28% from last year. And a lot of this we think really has to do with tighter and lower amounts of inventory, overall tighter underwriting standards, and certainly giving a lower foreclosure rate. And we're starting to see, or we'll continue to see, levels of appreciation we've been holding for a while now. So really great to still see good movement in the housing market. Also on Tuesday this week, there was the 10-year Treasury Market. And 10-year Treasury markets are always very closely watched, and they certainly have effects on interest rates. And this week's 10-year Treasury market was very strong. There was a very large buying presence of treasuries. And so when investors are nervous, stock markets are not doing well, investors will put their money into bonds, or in this case a 10-year Treasury. And as money goes into the bond market, it typically helps interest rates. We didn't see much movement in rates this week. In fact, for about the last 2 weeks, mortgage rates have been pretty much the same, but certainly seeing movement into the bond markets is a benefit of interest rates. Wednesday this week, CNBC Interview with billionaire David Tepper. He's the founder and president of Appaloosa Management. And it's amazing, just this interview with him sent stocks moving downwards. And certainly a very highly respected person in the world of financial markets, and gave us some very sobering comments. So Mr. Tepper said he kind of sees it going forward that he expects 2 to 3% returns on investment, which is certainly not very much, and volatility is here to stay, and he doesn't feel like we've hit the bottom yet in the financial markets. And certainly not as powerful as Alan Greenspan, but always makes you realize that sometimes one person's comments can move markets. And certainly on Wednesday this week, David Tepper was moving some markets. Thursday, quiet news day. Didn't really get much of anything. So far today, the news we got was on the PPI. That is the Producer Price Index. So the PPI measures inflation on the wholesale level. This does not always move out to us on the consumer side, so it's looked at and we see that there's definitely a little bit of increase of inflation there, but certainly not a market mover. Big news will really be next week, September 16th, 17th. The Federal Reserve has their meetings. On the 17th, they'll announce whether they are going to raise rates or not. And also, we really think one of the influencing factors on the 16th, so in the midst of their meeting taking place, we will get reports on the CPI, which is the Consumer Price Index, and the CPI will measure inflation, show us what inflation had done in the prior month, and also give us an accurate one-year reading on inflation as well. And as we talked about in the past, the Federal Reserve is looking at this. They want to see that inflation is approaching that 2% level when they're ready to raise rates. And certainly other contributing factors going into this now with recent market volatility of what they're going to do in the future, but CPI is going to be something that will be very highly looked at. I will be around all weekend. Would certainly love to be part of your business. If you have any buyers that need to get pre-approved, please give me a call. You can reach me anytime, and I'd certainly love to help you. Happy Friday and have a great day.